Question 1. Why do first-time buyers often feel uncomfortable with the approval amount they receive?
This is one of the most important conversations a buyer can have. And yet, it's rarely explained properly. Many first-time buyers feel a mix of excitement and anxiety when they receive their approval number. On paper, it looks great, but emotionally, something feels off. The number feels higher than what they imagined spending every month. That disconnect exists because lenders and buyers speak two different financial languages. Lenders approve based on risk tolerance and guidelines. Buyers live based on real-life expenses and priorities. As Dwayne Busiek, I tell buyers early on, approval is not a recommendation, it's a ceiling. Your comfort zone usually lives well below that ceiling. Understanding this early prevents regret later.
Question 2. What exactly do lenders look at to calculate affordability?
Lenders focus on predictability, not preference. There are 4 core pillars they use to determine affordability. First is income stability. Lenders want to see reliable income over time. That's why 2 years of history matters so much. It's not about how much you make today, it's about how consistently you've made it. Second is monthly debt obligations. Car payments, student loans, credit cards, personal loans. These all factor into the equation. Lenders don't judge why you have debt. They only look at the monthly obligation. Third is credit profile. This includes your score, payment history, balances, and account structure. Credit tells lenders how you manage financial responsibility over time. Fourth is loan program guidelines. Different programs allow different levels of flexibility. FHA, VA, and conventional loans all treat risk differently. All 4 feed into one major calculation, debt-to-income ratio.
Question 3. What is the debt-to-income ratio and why does it matter so much?
Debt-to-income ratio, or DTI, measures how much of your gross income goes toward monthly debt payments. Lenders look at housing-only ratio, total debt ratio. Most buyers never realize how influential this number is. For example, 2 buyers with the same income can receive very different approvals depending on how their debts are structured. But here's the critical insight. Just because a loan program allows a higher DTI doesn't mean it creates a comfortable life. As Dwayne Busiek, I've seen buyers qualify easily and still feel financially stretched after move-in because the payment didn't align with their lifestyle. Question 4. Why does using gross income create confusion for buyers? Lenders calculate affordability using gross income, meaning before taxes and deductions. But buyers pay mortgages using net income, what actually lands in their bank account. That gap matters. A payment that looks reasonable on paper can feel very different when it competes with groceries, gas, childcare, healthcare, and savings. This is why smart buyers don't ask, "What will I be approved for?" They ask, "What payment lets me sleep at night?"
Question 5. What expenses are included in a mortgage payment that buyers often forget?
Most buyers think mortgage payments are just principal and interest. In reality, payments often include property taxes, homeowner's insurance, mortgage insurance if applicable taxes and insurance are not fixed forever. They can increase, and when they do, your payment increases too. That's why it's dangerous to budget at the very edge of affordability.
Taxes
Planning with margin
are not
protects you
fixed
from
forever.
surprises.
Question 6. Why do property taxes play such a big role in affordability?
Property taxes vary widely by location. 2 homes with the same price can have very different payments simply due to tax differences. Buyers often fall in love with a home without realizing how much location impacts monthly cost. As Dwayne Busiek, I encourage buyers to evaluate total monthly obligation, not just the purchase price.
Question 7. How do interest rates affect more than just the payment?
Interest rates don't just change monthly cost, they affect strategy. Rates influence purchasing power, loan structure options, refinance timing, seller negotiation leverage. Some buyers use a buy now, refinance later strategy. Others use temporary rate buydowns to ease early payments. The key is understanding that rate strategy is flexible. Panic is not productive.
Question 8. What is payment stress testing and why is it critical?
Stress testing means asking tough questions before committing. Could I still afford this payment if taxes rise? What if insurance increases? What if income temporarily changes? Buyers who stress test their payment before buying almost never regret their purchase. Buyers who don't often feel trapped. As Dwayne Buziak, I help buyers test reality, but not just qualify on paper.
Question 9. Can lowering debt improve affordability more than increasing income?
Absolutely. And this surprises many buyers. Paying off or reducing a small monthly debt can increase approval strength, lower interest rate, improve loan options, increase peace of mind. Sometimes preparation is about subtraction, not addition. This is why early planning creates leverage.
Question 10. Why do different lenders give different affordability numbers?
Not all lenders calculate risk the same way. Differences come from loan program expertise, internal guidelines, comfort with certain income types. That's why buyers shouldn't assume the first answer is the only answer. Education gives buyers control.
Question 11. What mindset shift should buyers adopt around affordability?
Affordability isn't about pushing limits. It's about alignment. A home should support your life, not restrict it. When buyers prioritize balance, they enjoy home ownership instead of resenting it. That's the difference between owning a house and feeling at home.
Final question. What should buyers do after watching this episode?
Affordability is personal. Before house hunting, buyers should understand their comfort zone, their flexibility, their future plans. If you want help defining that clearly, I'm here. 804-212-8663, Dwayne at coast2coastml.com. My name is Dwayne Buziak, and this series exists to replace confusion with clarity, so first-time buyers can move forward with confidence and control. In the next episode, we'll break down credit scores, what matters, what doesn't, and how buyers can improve them faster than they think.